Good evening, everyone, and welcome. Today, I will be talking about high probability patterns for successful trading results for any market, any asset, and more importantly, for any market environment, whether the market is going up, whether the market is going down, whether the market is sideways. This is a great strategy to have for recession, for, depression, whether the market is exuberant and continuing higher. So pretty much in any kind of market environment. So let me introduce myself a little bit. My name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com. I run a trading education company that is focused on trading, on educating individuals how to day trade, swing trade, and also actively invest in the futures and the equities market. So focused on futures and stocks. I actually trade in the first 2 hours in the morning, futures, and I swing trade stocks. And in fact, we did have a lot of discussion about stocks throughout these 3 days, and I still have a lot of surprises for you guys and some stocks that we can talk about tonight. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking, and I'm also the designer of an institutional proprietary trading system that is based on price support resistance. And we talked a little bit about this in day one of the presentation of this conference, of the Fibonacci and Elliott Wave conference. I tackle 8 layers of price support resistance, and 2 of the layers are Fibonacci's, and I use a hybrid Elliott Wave. I also, for my day trading, I also combine all the knowledge into the support resistance areas for those 8 layers that I need to see confluence elements into with specific trigger times. So I time my trades. I have been trading for a very long time, and I have found that if you're day trading, you should be in the market at certain precise times. Also, specific price zones. These are specific price zones that I'm very fortunate to know where these price zones are from my mentor, institutional trader, that taught me that institutions do not have the capacity to move all their, to move into, for example, a stock or a futures contract with all their volume at the same time, with all their size, with their position size right from the get-go, let's say at a exact price. So they scale in. So these are the best kept secrets, the areas where they scale in or where they scale out. And also chart synchronicity and divergency, which is very important for the market, because if you're having a divergent market, it's very hard to trade. For example, if you're having the Qs or NASDAQ that are stronger, for example, like we had it back in 2020, then you have a weaker, for example, mini S&P, or you have a weaker SPX, SPYs, or weaker Dow. That makes it a little bit harder to trade because the market is going to be confused at that point and will not know how to read the certain move. For example, if you're having NASDAQ that is super strong, you're having the Dow and S&P that are a little bit weaker, and then the market is confused in the sense that it wouldn't know whether the S&P is going to start, influencing NASDAQ in weakness, or NASDAQ is going to transfer the strength influence throughout the rest of the indices. So it's a little bit problematic. And of course, any time you tackle the market, whether for day trading or swing trading, or even when investing, you want to make sure that you move into the direction of the strength or the weakness with your stock picks or indices picks. And I specialize in high velocity moves. So what that means is that when I have my entry zone, and when I decide my entry zone based on the technical levels, based on technical analysis, and I wouldn't say 100% technical analyst, trader, because I do focus, let's say 3%, 5% on the fundamental side as well. So yes, I do focus on earnings, and especially when I'm, kind of like preparing my shopping list for stocks, especially if they have declined. I do my due diligence on the fundamental side as well. All right. So as you guys know, probably you have heard me yesterday, that Trade Out Loud, I'm very proud of this. Trade Out Loud has been nominated as the winner of the best financial literacy tool last year. We are competing again this year as well. And it was chosen out of 400 financial companies. So yeah, that's a really big thing. We have great products, great services backed with transparent track record. So here's what I planned for you guys today. So we're going to talk a lot about technical analysis, because when it comes down to Elliott waves, when it comes down to Fibonacci's, I'm pretty much sure that you guys have literally wrapped it up by now, and you know what the general idea is behind Fibonacci's, what the general idea is behind the Elliott wave. So basically, you need to have a really strong trend. You're getting measured moves, you're getting expectations. That is the expected move, and that is because institutions are looking for a finalized area, for an area in which they are expected to take some profits. Nothing goes without measure with institutions. Institutions really want to know where they enter and what is the capacity of exit and what is the possible reward on that specific trade. So today I will be talking about building the foundation for your next trade. We're going to talk a little bit about the pre-planning phase. Also, how to identify what to trade based on pure price action and technical analysis. And yes, it involves trend. If it involves trend, yes, it involves Elliott waves. They call it hybrid Elliott waves. This is how I've been taught to trade. And of course, Fibonacci's. So how technical analysis will help you identify directional bias with maximum accuracy. And that is mostly, again, the trend rotation, which lands into the hybrid Elliott wave. How technical analysis pinpoints the entries, the stops and targets, and trailing, because yes, you have to consider trailing. Trailing is very important in how you scale out into targets. And of course, technical analysis shows you when to trade and when to, guess what, sit on your hands. For example, it was not a very good environment within the last couple of weeks, and the market just shifted a little bit more today and actually this week, because it was literally trading on some really nice technical patterns. And that's the reason why it was acting the way it was. Trading is all about candlesticks. Trading is all about price action. It's all about the location. All right. Well, we're all here because we want to learn the universal language of money, right? So when you go to a foreign country, right, and if you decide to reside there, guess what? You have to learn the language, right? So for example, if I decide to go to Argentina, right, I want to learn Spanish because I want to be able to communicate with everybody there in Spanish, right? Same thing with trading. When you get into trading, you need to decipher high probability moves, and you do that by learning the language of trading, right? By learning technical analysis, candlesticks, trends, strategies, money management, etc. So why is it that 95% of traders fail, knowing that, yes, you have to have a really good, solid education before you get into this market, especially in the 2020 market, where everything is almost everything is literally in high frequency trading computers, algorithms, black boxes, gray boxes, you name it. Well, because they come unprepared for the market. They think that if they open an account and they know a little bit about, red and green candlesticks, or not even that, or they hear it at a water cooler, or they are literally on Reddit and they read about meme stocks, they think that that's going to be a go. So they come unprepared, and a lot of individuals come unprepared for the market and, trade the GMEs and trade the BBBY. I don't have anything against those, but trade them when they're setting up, and don't just go ape on them where you're literally HODLing. All right, so you need charting skills. Without charting skills, you're not going to succeed. And if you know charting skills, then it's easy for you to identify Fibonacci's moves, Fibonacci retracement, extensions, projections. It's easy for you to identify trends, because that's what Elliott Wave is all about. And of course, risk preparedness. So what is risk preparedness? So a lot of traders come into the market saying that, okay, you know what, I'm just going to buy Amazon or I'm going to buy Apple, not considering risk. If you don't have a risk location, or if you don't know how much you need to allocate from your account size, from your trading account size, then that trade is not going to work for you. What I'm going to tell you is going to be very shocking, but I have a lot of friends that are brokers, and what they tell me is like horror stories, because they have, and this comes like the smaller the account, the worse the situation and the worse the trading is. Because in the futures market, for example, I'm just going to give you this example and then we're going to move on. In the futures market, for example, you're getting a lot of traders that are entering trades with a lot of risk. And I'm meaning 20%, 30%, or 50% of their account size. That's true. Where in a conservative world, and for example, the risk per trade should be 1 or 2% of your account size. And literally, they don't know why they're blowing up their accounts. Think about this. If you have, for example, a $10,000 account, and if you risk, for example, let's say 20%, I'm not even saying the 30 or 50%, the horror stories that I hear. I mean, you only need about 3 trades or 4 trades, and then you blow up the account. The worst thing that can happen for you is to win on a trade, you get cocky, and then you risk even more, like 50 or 60%, and then you're liquidating that account. You're just a liquidity provider for the market, where you want to transform the market in your favor. You want the market to be your personal ATM machine. And yes, it's possible. All right. And of course, the mindset, right? What kind of mindset you come into the market? Are you in the market for the right reasons? The mindset is very important, because if you're coming to the market and saying, oh, I hate doing this, I just hate looking at charts, I would rather watch TV right now, I would rather be in the kitchen baking a cake, or oh my gosh, I have to get my kid from school. No, it doesn't work like that. So you have to find out your allocated time, not only your risk amount, but your allocated time. So that time is your you time with the market, because that is the time when you need to produce the income. So not only that, you have to be into the right mindset into the market, be into that Zen zone, but you for sure have to be into a mindset, a millionaire mindset, where you're going at the market, you're going in the market, you know exactly what you need to do, and you go and get it, versus the welfare mindset, where you're winging it because you have no idea what you were doing and you're thinking small. So the universal language of money is technical analysis. And yes, this includes Elliott waves, this includes Fibonacci's, it includes trends, it includes trend reversals, it includes a lot of other things. So what is the reality? Think about it. Individuals will literally spend 7 hours researching for the best $300 barbecue to buy, but they will invest $3,000 in a stock they've never even heard of. Right? Isn't that right? I mean, this is human nature. So let's understand technical analysis. The most important component is price action. Price action is the only non-lagging indicator. And then you have price forms, and then you have price that forms patterns. So from those little candles, for example, if you're getting one candle, do you have a pattern? No. When you're having an IPO, that comes out, right? And at the end of the day, you have only one candle. Well, that candle doesn't represent anything. It represents the price action activity within that day. And there's a reason why not a lot of traders, including myself, do not trade IPOs unless you have kind of like a little bit more information of the company, where it's going, because you need to see the technical pattern a little bit. And maybe sometimes I just need a year before I get into an IPO. If you have, for example, 2 to 3 candles, right? You need 2 candles to confirm a buy or a sell, right? Red to green or green to red. And then if you have more candles, for example, 5 or 10 candlesticks or 20 candlesticks or 50, that price action forms patterns. Now, if you have patterns, depending on how the price action is moving, whether up or down, then those candles are forming trends, right? And you're getting an uptrend, you're getting a downtrend, or you're getting a sideways market. When we have this information on the chart, we can use certain indicators that can forecast future price swing movements with high probability. Why is that? Well, you have the crystal ball right in front of you without even realizing. But on the left-hand side of the chart, there's a whole story that is capable of reflecting future price action. That's right. The left-hand side of your chart is predictive of what the right-hand side of the chart is going to do. So why technical analysis? Well, first of all, it's going to help you identify the best entries, stops, and exits because it's based on pure price action. It's going to help you determine your size, your position size, because if you have your entry, if you have your stop, then you know how much risk you need to allocate for that trade. You know whether you're going to take the trade or maybe you're not going to take the trade. And it also shows you market participation. Yes, market participation is very important because, for example, right now, if you're looking in the market, we have a bunch of congestions that are happening, right? Without, the price is moving a little bit higher, the price is moving a little bit lower. And yes, there are some really great swing opportunities. I myself took some great opportunities. I have shared them with you guys here within the last 2 days, and today I will share some more trading ideas for you guys to see how they work. We're going to revisit some of the calls that I made on Tuesday, some of the calls that are made on Wednesday. They all worked out, right? Because they're based on momentum. If there's no momentum, you don't call a trade. So it's very important to know when to call a trade and when not to call a trade. So don't be afraid of sitting on the sidelines and say, hey, you know what? I can't find a trade. If you have to squint, then the trade is not there. If you're hyperanalyzing, the trade is not there. You're just forcing a trade. So the trade should come to you very easily, and the trade should speak to you. Say, hey, this is my entry, this is my stop. Take me longer, take me short. And of course, enter with institutions. This is very important. Ahead of the crowd. The trades that I called were ahead of the crowd. And right when we call the entries, they started to work because those were the inflection points that pushed the price higher. And of course, trends are going to be your best friend. I am very adamant about trends. I only go long in uptrends and short in downtrends. And if I don't have a trend, there is a strategy that I deploy based upon the dominant trend that we have on higher time frames. And those are quarterly charts, weekly charts, depending on where my zip code is. If I'm swing trading or day trading, I go a little bit deeper in. So pre-plan for your next trade, the research, and the selection criteria. The most important part of the process is the preparation part, is when you identify what you need to do, right? And where do you start? I always start my analysis top down. So I always look to the left hand, I always look to the right hand side and go left, because you want to have your macro to micro price action analysis. You cannot scan unless you know what you're looking for, right? Overall market conditions, internals, before you determine what to trade. So the common denominator for your trading as a rule should always be the Qs, the SPYs, the diamonds, right? Whether you're looking at futures, whether you're looking at these ETFs, it really doesn't matter. I look at both and determine those inflection points that may trigger either continuation or rejection. All right, so here's a really quick example. For example, here's a quick example. I'm getting really tired at this time. All right, so here's an example of an ascending pattern. You could see it rising tops, rising bottoms. So again, within this pattern, you're always going to see the ABCDs and a repetition of those, and that is an indication of a strong uptrend. So you can use trend lines. If you're not really secure, if you're very new to trading, just take those trend lines and try to bracket the trade. Use equidistant trend lines because these are the easiest to use. And I know that sometimes within the market, you're not going to find these equidistant channels, and you're going to have a really kind of like distorted price action and price pattern. That is when the price is falling off the wagon, is falling below, or is just rising above the pattern. So what do you need to do? And basically your analysis know-how. So what you need in order to start analyzing for yourself and not rely on somebody else doing the analysis for you. Or, you can verify your analysis skills with someone that is doing market analysis, and then you will understand that a lot better. So what you need to do is, first of all, you need to understand the relative weakness and the relative strength. I explained it a little bit yesterday, and this is very important because this will be in relation to the index that that stock belongs to. So for example, if I'm looking right now at Amazon, right? I'm going to be looking at the Qs because I want to see if they're trading in sync, and I want to see if, for example, Amazon has relative strength compared to the Qs or relative weakness. Because if I have strong Qs and weak Amazon, then I'm going to skip Amazon and go for something like, I don't know, like Tesla, or maybe I want to go for something like NVIDIA or something that may have a lot more relative strength. The reason for this is because you want the price to advance higher, faster, for example, for a long position. And if you have weakness, then you want to pick a really weak stock or a weak index among the indices to short, because that will have the capacity to move lower faster. And that's what it's all about. It's instant gratification. It's about how fast you can make money and how fast you can put the things together. These are little tricks that are going to have really high impact. The next thing that you need to look at is the trend. Is the trend favorable for a continuation higher or for a continuation lower? Then, of course, you're going to look at support resistance. And like I said, I do look at 8 layers of price support resistance, including the trend. So I have a lot of elements that I look for. Of course, Fibonacci's where is the fib landing within the sequence? And of course, I look at my key levels, and if there's a buy or a sell opportunity based upon the pattern and the strategy that I'm using. I have 10 strategies, 10 go-to strategies that I use. In fact, one of the most reliable strategies, the buy strategy, is the buy pocket strategy or the sell pocket strategy, which I use almost 90% of the time. So yes, you can make a bunch of money by only using just one strategy and running with that strategy. And as soon as you get really great with that strategy, then you can step in and add on another strategy. Of course, you have to decide your trigger point that represents your entry. You have to decide your stop, which is going to be based on the entry and the stop. You're going to be deciding your position size. Obviously, within the same sequence, you're going to be deciding your targets. And remember, for targets, they need to be present on the technical chart, because it, shoulda, coulda, woulda, or, oh my gosh, I'm risking, for example, 1 hour, I want to get 5 hours in return, doesn't really cut it, because you need to, the chart needs to have that tradable void to run into those targets. And of course, other projected moves, right? So if you're dealing with all-time highs or even all-time lows, for example, it's a great idea to have those Fibonacci projections. I love using projections, and especially, there were, for example, 2016, 2017, 18, 19, 20, and even in January 2022, this year, I have used projections to determine targets above, guess what, all-time highs, right? Because remember, institutions want to know and want to have a measured move. And this is what Fibonacci is all about, having that measured move. So this is what, for example, a Fibonacci pullback. And this is not a retracement, but this is a projection. This is a projection. So this forecasts how high the price is going to go, right? From the pivot high to the pivot low, and it's going to forecast how high the price is going to go beyond an all-time high. Support resistance, what support resistance does is support resistance. The more you understand support resistance, understand it in the context of a band, if you will. Think about a mattress, right? Think about a mattress at the bottom and a mattress at the top. So the price is not going to go hit, boom, that support or that resistance, and it's literally going to stop into that precise price. It's an area. So the more you understand the support resistance is an area, the more you're going to allocate a little bit of wiggle room for your technical stop, so you're not going to get stopped out as often. These are simple concepts that are going to keep you on the safe side when you trade. So what kind of indicators do I use? I don't use a bunch of indicators. I don't use a whole lot of indicators, but I do use moving averages. I use support resistance. I use trend lines, Fibonacci Elliott waves, and volume. That's pretty much it. I don't use a lot. And remember what I said yesterday, that moving averages are what? delayed, right? These are delayed indicators. The only true indicator is price action. So that's why price is going to be my number one indicator. So they will help you identify key areas in your technical charts. So technical analysis is the key to successful trading. You get confidence, knowledge, and consistency, which is very important, right? Because, and again, here in regards to consistency, the only way you can achieve consistency if you position size and use the same risk on all the trades. Because if you take a trade, for example, you're going to take Apple long, if you're going to risk $500, and then you're going to take Intel, and then you're going to risk $200, or you're going to trade standard shares, for example. You know what? I have my account size, blah, and I'm going to be trading 500 shares of this, 500 shares of that. I'm not even going to calculate, right? So that lazy mentality, that's literally not good, because you're going to achieve all kinds of fluctuations in your account size. I mean, if the market goes higher, if you're not going to get any stops, or if the market goes lower, and if you're short and you're not going to have a lot of stops, that may work for you for a while, as long as the trend continues. But as long as you're going to have a trend change, you're going to get killed. And that's number one reason why traders fail and don't have consistency, because they don't respect their position size. Once your account grows with 30% or 50%, you can increase the size according to the new money that you have in your account. You have consistency, you have growth, you have income, you have wealth, you have financial independence. So high odds trade components. What are the high odds trade components? Well, first of all, it's the market environment that you need to evaluate. What kind of market environment are we in right now? What is it influenced by? Is it influenced by geopolitical events? Is it influenced by, I don't know, for example, in the futures market tomorrow, we have the contract roll for the first time, and it's a very exciting time. Where the futures contracts are going to roll from the September contract to the December contract. And there is some wiggling happening into those indices tomorrow that may impact the stock market as well. And then next week, well, we have the quadruple witching option expiration, which is going to be a doozy into the market. Because we have futures contract that will expire. The September contract is going to expire. Stocks are going to stock options are going to expire as well. And we also have something that is going to really shake and bake the market, and that is going to be the following week, which is the FOMC. Great hike, right? Is it going to be aggressive? I mean, how's it going to be? So we do have a lot of things that are impacting the market environment, and your obligation as a trader is to know how to safely navigate with all the information that the market is offering you. First of all, you're going to be evaluating the trend, which is not hard, because you're going to have to identify what higher highs, higher lows, or lower lows, lower highs, or sideways price action activity, and adapt according to what environment you have. You're going to be evaluating your technical analysis on multi-time frames. So when I'm talking about multi-time frames, I'm talking about, looking at, let me see if I can do this. All right, just give me 1 second. And for example, this is my home screen. And as you guys can see here, I'm prepared at any single time of the day for day trading or swing trading, or even placing an investing position. And that is because my home screen has all the time frames, has my analytical time frames, 1 hour, daily, weekly, and monthly. And I also have my executional time frames, and these are for day trading: 1 minute, 2 minute, 5 minute, and 15 minute. And every single time when I look at the charts, for example, if you guys are, telling me right now, it's like, I don't know, look at a stock right now. So I don't know, you guys are giving me, I don't know, let's call it stock CRM. Okay. CRM. All right. So if you're giving me CRM, I could right off the bat tell you that yes, it has reached support on the monthly. It's bouncing a little bit here, not determine the directional bias, but yes, it's trying to execute a rotation based on the support. It did today a weekly rotation, a daily rotation. Then yes, it has the capacity to go into the 160. Okay, so very easily. So see how it flows. You could throw any chart at me, like in a fraction of a second. I could give you the full analysis just by looking at it for 5 seconds. I mean, this is what trading is should be all about. Trading should be very fairly easy. All right, so let's continue with some more components, right? For example, zoom in on the time frame of your choice, whether you're day trading, swing trading, and investing. For day trading, like I said, you're using small time frames, 1 to 15. For swing trading, I'm using 1 to 4 hour daily and weekly, obviously. And for investing, I'm using the weekly, the monthly, and the quarterly charts. It depends on your timing horizon. Then you have to wait for a clear setup to develop. So for example, if you're watching, if you're having a trading universe, okay, and if you have, for example, a universe of 50 stocks, you have to be diversified. So have some home builders, some financial, some tech stocks. You know, it depends on what you prefer. Some pharmaceuticals, some, I don't know, whatever you want to look at. You can actually start with that because it becomes overwhelming and intimidating if you're having a really wide selection, right? If you're looking at the market in its entirety. So for example, if you scan through 500 S&P stocks, all right, so that can be a little bit intimidating. Or you could start with the Dow stocks, for example. So yeah, and then, you know, choose your universe and then choose your zip code, whether it's day trading, whether it's swing trading, whether it's investing. And then you have to wait for a clear setup to develop. No setup, no trade. It's as easy as that. So evaluate your risk to reward ratio, have a management plan for it. So be always prepared with how you are going to react and what your action plan is when the price is going into your first target, second target, and so on. Because I assume you have a plan. If the trade goes against you, you have a stop, right? So you have a plan for that. That's the plan. You stop out. That's one bullet. You know what that represents? It's a little stop in an ocean of trades that you will be doing within your lifetime. And then you wait and execute your trade. I use only limit orders, whether I'm day trading. Yes, I limit order when day trading because I know exactly where my price is going to be. I watch price action to see how it's behaving before the trigger and into the trigger, obviously. And then afterwards, the trade is on autopilot. That's right. The trade is on autopilot. So you know what that means? Stress-free environment. So every trade starts with the technical image. You have to, you know, kind of like, you know, when you go to a museum and when you have like this beautiful, gigantic picture right in front of you, right? You have a Van Gogh or whatever it is in front of you, Rembrandt, you have it in front of you. You don't just go very quickly to watch all the brush strokes because then you're missing out on all the action that you have in that painting. And that painting cannot really deliver for you the image and the impact that it should have on you. That was designed to, let's say, influence you in a way or another, right? Your emotional impact. You're not going to have that emotional impact. However, if you move, for example, 5 to 10 feet or 20 feet, you know, back, then you're going to be able to find and see the whole picture. Trading is the same way. And in many ways, trading is literally photographic memory. That's what it is. It's about the capacity of remembering winning patterns and remembering losing patterns. And this way the brain is wired and say, hey, if I see a pattern like that, I shouldn't be taking it anymore because I lost once, twice, or 3 times. Okay. All right. So the secret to consistent trading starts with multi-time frame analysis, like I just showed you. Find the best odds, day trades, swing trades, core trades. Use the same system for all assets, whether it's trading stocks, futures, forex, crypto, options, anything that you may be trading. So for example, here we have high, lower high, lower high, lower high, but you can see here that we have pretty much like equal lows, right? Look what happened once we broke below these lows, right? We immediately, you know, scream to the downside. And if you draw, for example, another line in here, right, you would easily see and you would easily recognize that the asset was what? In a downtrend, right? And once it hit the support, it bounced back into resistance and back down, right? So here you have all the waves that you need, right? Even if you have your ABCDs and even more. right? And this is the characteristic of a downtrend. It's so much easier to short into a downtrend. But there's something else that is happening here that not a lot of traders are aware of and cannot really identify when these elements are happening. And in fact, we did mention them last week in our trading room, right? And they played out this week. Boom, right? The change in the trend. Not a lot of traders know how to do that. So the change in the trend is happening when you're having a robust support, you're having a bounce into resistance right here, and then you're having to pull back. As soon as you see like the price action is trying to rotate, you can see that it's trying to rotate here. It does a little wiggle, and it does a bigger wiggle right here with the big doji, and it creates a pivot. Once it creates the pivot, and when the price is approaching the completion of that pivot, it forms the pivot, that cone formation in its entirety, then you can talk about a higher low, right? So now you have your A, B, C, and D ready for a continuation higher. And so Elliott Wave is great, not only for trend trading, but it's also fantastic in reading the reversals into the trends, right? Super cool stuff. This is so good. All right, so for example, here you can see that you have the bullish above and bearish below cycle because you have the price action, which is into a lot of support. And when the price action is going to push below the lowest point of this base, yes, then the price action is going to continue lower. And if the price action is going to start breaking above the base, then guess what's going to happen? The price action is going to continue higher, right? So from this point, you're looking for a continuation higher, at least into the prior high. And when you have a wide tradable void, for example, the way we have here between, for example, the entry and, oops, all right, here we go. This is the tradable void that I was talking about. When you have this distance between this breakout point and this resistance point, if you apply Fibonacci projections, right, you will be able to determine alternative targets that can be within the pattern all the way into the prior high and even higher than that. So you will have yourself, you know, all your plan is going to literally work because you have that pre-planning that is done. Okay. What I trade? Well, I trade futures, day trade futures, and I mostly focus on the indices. They represent my go-to. They are my employees, and I send them to work every single day, and they need to produce every single day. You know, so far so good. I've been doing this for 20 years. I'm still here, and I have a really robust track record. So that proves that this is really a nice way to make money for a living, right? And then I trade stocks, pretty much any stock that you can ever think of. I try to stay away though a little bit from penny stocks, but anyways, that's not entirely, okay, not entirely, but anyways, I have my moments once in a while, once in a blue moon, once in 10 years, probably I have my moment with a penny stock, but anyways. So in trading, there's no room for average, and you need to understand that. And you understand that because you guys are here, because average is the top of the bottom and the bottom of the top. That's what average is. So did you guys know how much money you need to retire and how important it is for you to understand, to learn how to trade, or anyways, just find a gig to make money from, because it may not be for trading, but you can find totally other gigs that you can discover and make money from. Investors feel that they need an average of $2.5 million in retirement to maintain their lifestyle, according to a Lake Mason survey. Well, that's about 2.2 million more than the average balance of $385,000 those individuals actually had in their 401ks, IRAs, and similar retirement plans. So you can see why so many people are driven to the market than the real estate market, because the real estate market is already. I use technical analysis almost 8% of the time. We only use just 2 trading strategies that I mentioned. The strategies are used only in high odds confluence zones where we have an accumulation of 2 or more support resistance areas prone to become buy zones or sell zones. So we buy and sell with confirmation. We don't buy a support. We don't sell into resistance just because it's within a trend. We need to have price evidence in order to do that. technical analysis, the reality is that it's one of the best drivers that assures continuation, rejection, style, or pattern. And oftentimes technical analysis overrides any kind of fundamental, because how many times have we had, bad earnings from a company and the stock went higher, right? And the other way around. It identifies potential target prices. It signals momentum. It allows traders to anticipate trades with high probability setups. It limits risk and helps traders trail the trades based on key levels. Price action just confirms that, and fundamentals helps with the direction and the momentum, especially when the earnings results are coming out. You can make it as complicated or uncomplicated as you like, because you could go as far with technical analysis. You could do GAN analysis. There is even such a thing, guys, as astrology analysis. I don't know if you guys just give me a yes if you have heard of astrology analysis. But yes, there is astrology analysis. And for example, when Mercury is retrograde, the market is more prone to pull back, or there can be some divergences in the market. So yeah, it depends on you how far you want to go. But I could tell you, and I can assure you right now, that you don't need a lot to make money into the market. You don't need a lot to make money into the market. All right. So for example, let's just run through some really live examples, and we're going to actually continue from where we left off yesterday. So let's see here if there was okay. So yeah, these are some charts. We talked about strategies. We tapped into that. So yes, let's go into charts right now. All right, because I wanted to reserve some time for charts, because I know everybody loves charts and I do too. So I really don't love talking on, general things about trading on slides, but sometimes you need to teach. All right. So, for example, Monday, Tuesday, Tuesday, it was the first day of the week. So getting very confused because we had Monday off. But do you guys remember we talked about some stocks on Tuesday, and we talked about Tesla? Okay. That was the first stock that we talked about. And I said that Tesla is going to go higher, and we had a nice confluence here. And I said that if Tesla is going to break above 276 to 276.20 is going to go higher. I gave targets into the 280. I gave another target into the 289, and I gave another target into the 295 and 300. And I said that the first two targets are going to be probably into the end of the week. Well, here we are. In fact, we had a high today of 289.5 into Tesla. Tesla will continue higher. Yesterday, I was telling you guys that we had a very robust and strong close, and I talked about the SPYs, and we're going to review that in a second. And I said that if we actually close into a win bar where the domain is dominated by buyers, by the bulls, right? There's only the normal price action would be for a continuation higher. The odds are when you have a win bar of 90 to 95%. So these are the odds that my methodology and I trade by. So I know trading involves really high risk, but these are the odds that I apply to my trading, right? So you can see that the price action continued higher 100% of the time, right? Here's the proof. Like I said, if we get the technical rotation, again, I had 95% odds that price action will continue higher based on the technical pattern, based on the location, and it did continue higher. It continued higher yesterday and today, right? What are the odds for the price action continuing higher right now? Well, first of all, we have a win bar again, and we have the high of 279.76. So if we break above 80, we're going to have a little bit of debacle here into the 290 area, because we have some strong resistance. We have some lows over here, and we have the lower 20 SMA. We have the price under the 20 SMA. But if the 20 SMA is going to call the price, typically it does it, because the 20 SMA is going to pretty much react as a magnet going into tomorrow. It's going to suck the price right into it. It all comes to how the 20 SMA is going to digest the price. And if it really cracks a little bit above it, it's going to have a really nice continuation higher for at least $5. All right. All right. Another stock that I mentioned on Tuesday, and this is a quick recap. I mentioned Goldman Sachs, and I said, guys, but financials are very strong. In fact, I did post it on social media. I posted on my Twitter account, and I said that Goldman Sachs seems to be very strong. And in fact, it did go higher. And as you can see, the last 2 days here. So I was mentioning that Goldman Sachs will be a watch for Wednesday and Thursday. And what did Wednesday do? Go up. What did Thursday do today? It went up. What do you think it's going to do tomorrow? Well, my prediction is that it's going to go, and this is it's not a guess, it's a calculated area. It's going to go to 338. All right, there's another stock that I mentioned, and that is JP Morgan. And I said JP Morgan is a little bit stronger than Goldman Sachs, and I think it's going to go faster, higher than the rest of financials. And here it is. This is yesterday, and this is today. And by the way, you too have the crystal ball if you decide to apply it. Remember, the left-hand side provides you with a wealth of information. It's predictive of future price action. And if you know candlestick language, OMG, oh my God, this is so good, so good. It's literally going to put you in the stratosphere. You're going to trade stress-free. It's going to be so super cool. Okay, I promise you this. All right. So yesterday we talked about a bunch of stocks, and we talked about Starbucks. We talked about Starbucks, and I said, guys, Starbucks is so strong. This was on Tuesday. And I said, guys, Starbucks is strong. I think it's going to go higher. It's not that I think, I am certain, because there are certain parameters. And I said, if it should trade above 84.80 to 85, it's going to go higher, and it's most likely going to go into the, and I mentioned 88 to 88.50. Right now it's at 89.50. Most likely it's going to continue tomorrow into 90 to 92. Okay. So we did mention a lot of stocks. I also mentioned PayPal, PYPL yesterday. And here it is. 1, 2, 3 up. And I also mentioned something else in PayPal. I think PayPal may be a short squeeze. Take a look at this beautiful pattern. 1, 2, 3, 1, 2, 3 down. Remember that we talked about Fibonacci numbers. Now, I think I'm not really sure, and I attended, so I literally listened into most of the presentations here, but I don't think anybody mentioned what I taught you guys. Like, if you know how to count to 3, you know how to count to 5, you know how to trade, right? Because if you get a 1, 2, 3 pull back, right? You have a low, and you get a 1, 2, 3 pull back into a support level. This is resistance, now becomes support. You get a technical rotation here. And by the way, this is going to be bullish going into next week. Right? Super cool stuff. So 1022, 103 is the new target for PayPal. But hey, let's talk about some new trade ideas. How about now? Okay. So first trade that I am going to put up is going to be Amazon. All right. Take a look at Amazon here. So Amazon is setting up for a quite bullish next week. If the price action is going to remain within, let's say, or even start trading a little bit above last week's high. This is a weekly chart, by the way. All right. The price action is going to go back into the 140, back into the 145. But don't forget that next week we have the quadruple witching option expiration, which, by the way, remember that it has the tendency to pull the price away from technical analysis. That's what it does. So you have to be very careful how you trade next week, because the price is not going to be true to values, not going to be true to technicals, because there is going to be a lot of fleecing. And what is the purpose of option expiration, right? They're in for the kill. So what they're going to do is they want to kill the premium. So here's what they're going to do. If the price action, for example, for a certain stock will have a target, let's say here in Amazon, let's say into the 145, you know what they're going to be doing? They're going to push the price higher a little bit. Those that are smart, they're going to take their profits and run. And if you don't take your profits soon, guess what? Typically Wednesday, Thursday, it's going to be a down day, or Friday is going to be a down day, because they want to kill the premium. Okay, they want to kill the premium. So that's one of the reasons why, you're not going to get possible continuation. I saw continuation, and we saw continuation throughout, and obviously throughout my trading career, lots and lots and lots. You can imagine this is happening every third quarter, the quadruple witching option expiration, every third quarter. However, for example, in 2020, there was such a buy a scenario, everybody was buying, there was the stimulus, everybody was throwing money into the market, there was, the Fed was printing money, they were throwing money into the market, right? So they were helping the market out, and that's why everything was going higher. But now, right, we have reached a point where we need we need to help the market. So this is going to be a little bit more challenging, but all in all, this is what I'm telling you guys is that we are potentially closing a possibly strong week. And then if we go, for example, in the daily, you can see here that we have a really nice consolidation. So hear me out. If tomorrow the price is going to trade above 130.30, $130.30, it will start moving higher into the 131, 131.50, and it's going to try to go a little bit higher to this magnet, beautiful magnet, into the 134. Okay, so this is Amazon. So put that on your list. The other side that I wanted to talk about is Netflix. And these are trades that will happen. They have not triggered yet. These are going to trigger, right? So we're not discussing right now, coulda, shoulda, woulda. I proved to you guys live Tuesday, Wednesday, what the price action is likely to do. And with a precision of, like I said, my methodology has precision 95% of continuation or price rejection. Okay. So here's a consolidation in Netflix. Netflix has been dancing around, still trading below the 20 SMA. But hear me out. It may be getting closer, maybe closer. It's just like, closer. It's getting closer and closer and closer and closer to the trigger. Now, I don't know what the chances are for tomorrow, but because we only have one day left, right? Let's say if tomorrow the price is going to trade over $233.95 or $219 if you want to get with more price evidence, if you want to get in with more price evidence, the price is going to go to 250 and even a little bit higher above that. It's going to try to squeeze hard into the 300s. Isn't that cool? Also, look at the shape of the candle. Today's Thursday. Market closed, right? 7 p.m. right now, close to 7 p.m. But if we are not going to have, so if tomorrow there's not going to be any change, if the market is going to stay still tomorrow, not up, not down, it could go a little bit higher, but not to erase the 214, right? So if we still hold the 214 next week, when and if we break this week's high, we're going higher. Hear me out. 90% of the time, 95% of the time. That's how I take my trades. All right, let me give you another trade idea. And I know I heard someone in the trading room, I heard someone in here mention it. I believe it was yesterday about Intel. Well, Intel looks like death, right? Intel looks like death. It's sideways, it's ugly, it's messy. This is the weekly chart. Take a look at the monthly chart. Like, yikes, this is so bad. So bad. It's trading below the August lows. I mean, gosh, where is it going, right? Well, there's a little pattern. I'm not going to be married to Intel, I can tell you that. But I would love to take it for a short squeeze into the $31.50. So hear me out. Tomorrow, if we break above $30.90 or $31, we are going to go higher, possibly even into the 32, possibly even into the 32. All right. Okay, one more, and we're going to get back to special offer that we have, and I'm going to tell you a little bit more about what we do at Trade Out Loud. MMM. Oops, got super excited there. An extra M. Oh my gosh, take a look how cute this is. Take a look how cute this is. We have 1, 2 down. We have inside bar and tiny inside. Hear me out. The biggest moves come from the smallest bars. Don't rush when the market is really fast, and don't try to get in. Don't try to chase anything. Don't. Okay. So what you need to be doing is sit back and watch. Here's what's going to happen with 3M tomorrow. If it trades over 119.85, 119.85, write it down. you're going to be applying a stop, and I usually apply a bit wider stop of 116. It's going to have a first targeted to the 122 to 122.50, and then it's going to zip to 125. The setup is so good, so good. However, careful here, do not take the trades ahead of triggers, because if you do that, you're cheating, and you're cheating yourself. You're cheating the market. The market doesn't like cheaters. The market is going to lure you in and spit you out if you don't respect it. If it trades below 117, it may be a scale in short with the confirmation of the short below 116. All right, so it's a double whammy. All right, so I'm going to stop here. I'm going to go here to the slides back here and share with you that technical analysis will provide an accurate read on charts and instruments, and super fairly easy. So it's easy to scan. It's easy to know where your entries are. I mean, no effort, right? You saw how easy I look at the chart. You can actually throw any chart at me, and then I will tell you precisely whether it's tradable or not, whether I have interest or not, whether it has volume and it's worth it or not, and the interest, the stops, the targets. Okay. All right. So technical analysis is great because it's easy and really simple to learn. You're trending, and you can trade trending markets, you can trade sideways market and volatile markets, right? Volatile markets. So technical analysis helps you find trading opportunities in any market, in any style of trading. Technical analysis will teach you price action, which is the most important thing in trading, because if you don't have a good understanding of price action, then you cannot advance in trading. Okay. Bottom line, it provides you confidence, maximum confidence. All right. So I'm going to fast forward here. All right. So learn patterns that will save you time and money, eliminate emotions, grow any account size. You don't have to start with a big account size. You could start with any account size that you are ready for. So if you like what you heard today, we do have a special offer. And for example, we can, talk about more about our services. We do offer a wide array of services. But if you're interested in day trading with me, I trade, for income. It is an income producing style of trading. The course is called the Power Income Futures Day Trading Course. It teaches you how to day trade stress-free, trade less than 2 hours per day. I mean, come on, right? And generate a 6, 7, 8-figure income, depending on how the account that you start with and the amount that you start with. We will give you lifetime access to our course. We will provide you a manual with, by the way, 500 pages, over 500 pages right now, because we have added more material to it. You will have a limited retakes every single time we teach the course. You will receive a free invitation, because trading is not about reading a book once or attending a course once or coming to this webinar once and pretending that you can remember everything. You can't. It's not humanly possible. It's not you and it's not me. No, it's not humanly possible. So repetition is what is going to get you in there. Plus, guess what, guys? You're going to be trading with me. So I will walk you through your first trades. If you want, you can trade with us. For example, most of the traders that have attended the course are still with us because it's easy. It's a great environment, right? I call the trades. I teach you what to see and what to do. And now we have a lot of our traders calling trades in the trading room. You will have access to 12 sessions, 12 mentorship sessions. You will have access to a private Twitter feed. If there's a trade happening in the overnight, or if the conditions are changing, you're going to find out about it there. You have platform layout. We have private Discord room. We have student personal support. We have risk sheets who teaches you how to position size. Wow, what a concept, right? The Power Income Futures Trading Course, total value literally over $22,000. And we're selling it for $5,995, which is about, if you think about it, a robust institutional level course for about $16 a day. All right. The course is on October 17th through the 21st. We're not going to have one in September. So we're going to jump right into October. And we do have a special bonus if you sign up by Friday. So that is by tomorrow. And there's no exceptions. You're going to get literally September, October, November, and December for free in the trading room access. So that's a total value of, oh my gosh, $1,200. plus access to the 12 membership sessions with me once per month. All right. So this is all for tonight, guys. Thanks so much, David, for having me here today. I wish you guys the best of luck in trading. Trading is fun if you have all you need, literally. So thanks so much, everybody.